G'day everyone, Leigh here from Martinuzzi Property Group with your weekly real estate market update. Thank you for tuning in and I hope you're having a great week. Today I want to talk about some challenges that we're facing here in the Australian property market as we navigate through mid-2024. As always, you can check out my blog article at martinuzzi.com.au. I've got some charts in there this week which are quite fascinating, I found anyway. So have a look at that. So first of all, building costs, they're up. Material costs are up, labour costs are up. Since the start of the pandemic till today, costs are up 40%. So that makes it harder for a lot of these projects to get off the ground and complete, but it also makes it more expensive for people looking to build new to get into the market as well. On top of that, last month in May, we saw the inflation rate up 4.4%. That was up from 4.1%. So this has triggered concern and discussions around the RBA potentially raising that cash rate again in August, which obviously is a concern. So we're still seeing a big supply and demand imbalance. There's a strong population growth pushing in a lot more demand into the property market, but that inflation figure doesn't seem to be slowing. And if they raise that cash rate, that's going to put a lot of pressure on current mortgage holders. Now, looking at the average price in Australia, which I think sits around $800,000 for a property, that could push mortgage repayments over $4,000 a month, so up from $1,172 to $1,276 on top of all the other costs of living. That's a fairly big burden on households. A supply situation in June quarter, we saw that there was 127,000 homes purchased, but only 125,000 new listings. So again, that supply and demand equation is really unbalanced right now. However, growth is slowing. We saw the June quarter property price growth go from 3.3% last year to 1.8% this year. That is slowing down, and a few key markets are skewing those figures. Let's have a flashback to the past. If you were buying back in 1975, you'd be paying 27 times less than a property right now. So right now in Sydney, the median house price is over $1 million. Back then, it was just $28,000. So that's a big difference, right? So we're looking forward. We're seeing that property price growth slow. It's expected to grow between 4 and 6% over the next 12 months. And whilst the inflationary rate is a concern and that cash rate going up is a concern, we are seeing things slow down. So maybe it's too early to know for sure what they're going to do with the cash rate in the coming meeting in August. So that's my weekly real estate market update. I hope you've enjoyed it this week. Again, more details in my article over at martinuzzi.com.au. Please do check it out there. If you're looking to sell, buy, or perhaps you've got a property that you're renting, we would love to assist you with that. We're in the property market here on the Sunshine Coast and would love to be of service to you. Give me a call if we can help with anything else. Otherwise, have a great week ahead. And again, thanks for tuning in.